Welcome back, everyone. Michael here with Offshore Citizen, and we are going to talk today about what I'm referring to as the coming Russian crash, which is probably not what you think, but we're going to talk a little bit about it because I think it's relevant to investing and to making sense of what is going to happen, perhaps, fairly likely, in the world. But I think it's also interesting that we'll spend some time talking about sort of the mechanistic first principles behind why that would be the case, and that could have relevance in other areas that are maybe a little bit more immediate. So we will talk about all that today. Before we do, we're going to play the game of Where's Michael? So I will, as I'm walking around, kind of give you guys some sort of location, details in the sense of you'll be able to examine the surroundings and get some sort of a guess. You can put the guesses down below, and then in the next video, I will say where it was that I was in this particular video. And yeah, that'll be fun. The one thing just to note is it is fairly windy today, so I wanted to give you guys a view of what's going on. Hopefully there's not too much background noise in the wind, but the microphone probably will pick some of it up. Anyway, so let's just see here if I can give you some sense of the landscape. As I go around, you'll see some other areas as well. But anyway, you should hopefully get some sort of landscape. I'll try to obscure, really obvious identifying locations, and then you can guess based on landscapes, etc. So anyway, let's jump in and talk about the subject at hand, which of course is the subject of the coming Russian crash. Now, when I talk about the coming Russian crash, I'm not talking about Russia crashing. So that's where it's maybe a little bit deceptive. I've heard kind of some people make some comments over the last while that I think are sort of just like fundamental failures of logic. But the context here is basically that, we're very prone as humans to errors, right? We have lots of cognitive distortions, we have lots of cognitive biases, and so it is useful for us to try and identify in advance what those are and be very aware of them and to work around them. And so one such bias is recency bias. There's lots of others. Obviously, there's, I don't know, maybe 100 or more documented cognitive biases, cognitive distortions. And so, okay, we're going to see what we can see here. They'll give you a view of this nice, beautiful area here. Very nice area. Might give you a little bit of a sense of where we are. And so you can take a guess accordingly. Anyway, so yeah, as I was saying, there's these cognitive biases, cognitive distortions that we have. And I'll hear people make some comments that are essentially because something has been recently, therefore it is or it will be. And I think that's exactly the opposite of what we should be thinking in most of these situations. So, for example, such and such place is a good place to invest. Well, it was a good place to invest over the last while. That does not mean that it is a good place to invest today. I used to see this in kind of like late 2017, early 2018 for crypto. People were like, oh yeah, crypto. And it was like, well, yeah, it was really good in 2016, early 2017, mid to, yeah, whatever, 2017. And then it became bad because things became overpriced, etc. So I think the better way to examine these sorts of things, and the more interesting thing to think about, by the way, a little hint is these rocks that we see here. Anyway, the idea is to be thinking a little bit in terms of what are the core first principles drivers, like what is the mechanisms of what happened. I think being able to develop mental models for how things work is really, really, really useful. And so let's just consider one of the things that happened over the last couple of years. So we had the Russian invasion of Ukraine, right? What did that trigger? $265 billion of capital expatriation out of Russia. The largest in history, extremely fast. That in itself was a big deal. Obviously, you had, of course, money flowing out of Ukraine at the same time, so less, but still significant. And in addition to that, what you had is you had a situation where that capital could flow was highly restricted, okay? They said, okay, we're gonna sanction Russians, we're gonna put restrictions on who we're gonna give residencies and things like that too. And so the money from Russia disproportionately flowed into some specific areas. Dubai, Mexico, Bali, Thailand, Turkey. These are some of the big ones. And so, unsurprisingly, you saw massive capital appreciation in places like Turkey, Mexico, Dubai, in the areas of real estate, right? Obviously, at the same time, we had other factors driving people into those particular places, and this also played a major role in pushing prices up disproportionately. Now, I spoke recently about how, in my view, I guess it was around the start of August or something, I was saying that I figured we were close to the top of the real estate market in Dubai, and there's probably a bubble in the off plan, and I figured that, I mean, real estate markets move slowly, so you're probably talking by between 2025, end of 2027, the market will, at least on an inflation-adjusted basis, have a significant correction. Meaning that it may not like crash. I'm not saying it will, just dump, and it's definitely not going to dump tomorrow or next month or whatever. But if you consider that inflation will continue to be there, at the best case, I think markets go sideways over that period, probably over a longer period than that, and as a result, you have a net negative return in those spaces. And again, we're talking about over a larger period of time. The same thing tends to be true in Turkey, likely Mexico, likely Bali. I mean, I have business partners who are buying villas there, doing 20% yield on those places on just pure cash deposits, no leverage at all. And that's just kind of abnormally high. In a normal market, you shouldn't really have those types of returns. It's fantastic when you can get them, and a lot of people, a lot of clients of mine, a lot of friends, etc., making a bunch of money. That's fantastic. Very nice investment situation. But I wouldn't expect it to continue in that regard. And people will kind of point to, there's these limitations on the supply there, and it's growing popularity place. These things are all true, but they have to be balanced within the normal supply-demand dynamics. Thailand, similar sort of deal, et cetera, right? So what is the coming Russian crash? The coming Russian crash is the idea that Russian capital that flowed very quickly in will also flow out. And I'd kind of theorized a little bit about this over the last while, that, okay, you had, say, I'm specifically sensitive to the Dubai market, because I obviously live there. And I figured, okay, well, that market probably is going to see, although there's continuing trend of people coming in, and I think that trend will probably extend out quite a long period of time, it will be somewhat mitigated. Just as it was hastened by lots of people coming in from Russia when the war started, it will probably be mitigated to some extent by people leaving when the war ends. And I happened to have dinner with someone the other night. It's very connected with a lot of really wealthy Russians, and he more or less confirmed this thing. He said, yeah, all my Russian friends, their heart is in Moscow. They say as soon as the war ends, they're going to be selling all their property, all their vehicles, and moving back to Russia. And you can say, why would they do that or whatever? That's not really the point. The point is, at the end of the day, there's a lot of capital that has flowed into places, and that flow can go both directions. This is in addition to the fact that supply is being added. This is in addition to the fact that rate of change is really, really important. And so the rate of change was extremely high. That rate of change is no longer going to be nearly at the same pace, barring some sort of a black swan event, etc. And so I would expect that the ending of the war in Russia, and look, that war, in Ukraine, the Russian war on Ukraine, when that happens, and who knows when it will happen, right? That's a very difficult thing to guess. One would surmise and hope that it's not too long, but anyway, it will be what it will be. When that happens, you will probably see, probably not all of the $265 billion that flew out will go back, but a significant portion of it will. And it'll be like a tide going out, just like the tide came in. It came in very, very quickly. You can go in Newfoundland, the very massive tides that shift. They go up and down very, very quickly, and it's super strong currents. I knew somebody who dove in those. I think he said it's like 6 knots or something, some ridiculous pace of water flow. Anyway, when that happens, the opposite will happen. Again, probably not with the same magnitude, because probably not all of the money will go out. And of course, again, you do have other, it's not like, it's not necessarily clear, and perhaps even unlikely, that that would correspond to a whole bunch of other reasons for capital outflow to happen. So capital inflows may mitigate it to some extent, but I would expect it to dramatically negatively affect the prices in those particular areas. And so in my investment thesis, and I would encourage you in yours as well, to pay attention not to what has performed well in the past. In fact, if you were, maybe you should do the opposite, and maybe you should say, well, if it's done really, really well over the last little while, it's probably not going to do really, really well in the next little while. If you kind of look at the top fund managers or the top sectors, et cetera, over a 3-year period, are rarely those that are top performing in the next 3-year period. This is just a general, markets are cyclical in nature. Secured high prices is high prices, and so on. So there's that factor. But more significantly, I would pay attention to what are the supply and demand dynamics going on there. What is happening with respect to new supply being added? What is the rate of change? Rate of change is really, really important in these things, of people coming in and people going out. And what are the capital flows that have driven how things have been over the last while, and how will those likely change in the future? Very important to understand that when we're thinking about these sorts of things, we want to break down the flows. Like, where did the capital come from? How much capital was it? How quickly did it come in relative to the available supply? How is that likely to change in the future? And so my prediction on that, which might be wrong, let's be honest, humans are really bad at making predictions. Crystal ball is always broken, etc. But my belief will be that when the war ends in Ukraine, it will mean a lot of capital will be pulled out of markets where a lot of capital flowed in, and that will be quite negative for those areas. I hope that's interesting. Let me know your thoughts in the comments below. Hit the subscribe button, hit the like button. Thank you very much for being here, and I will see you on the next video.